Hey guys, welcome back to Investing Mentors. Today we have a lot to catch up on. Markets are crashing. Don't panic. This is the time to buy stocks at cheap prices. So here we go. Jump right on into Jim Cramer's best stock picks for 2022. Number 1, Chevron. Chevron? Yes, Chevron, the second largest oil company in the United States. They meet the world's demand for energy. The nation's market leader in gas liquids. In the last 1 year, the stock has done a fantastic rally of 50%, and now the stock is almost at its all-time high. Jim Cramer still thinks oil companies are undervalued, and the last good news for the company is they have received $4 million of industrial revenue bonds, IRBs, for the solar project from Eddy County to power its oil field operations. So let's hear it from Jim.
I find as the stocks go down, you want to buy some Chevron. I like Chevron because I just think that oil is still undervalued, even after last year. And if you look at bookings.com, the travel's unabated. So I would really hesitate to sell these oils. I'd actually buy Chevron right here. I think they're going to have a really good quarter.
To add up, I recently watched the interview with Michael Wirth, CEO of Chevron. He is really confident with the global oil demands, and the aviation industry has started getting back to normal. He says that it should be adding so much value to them in 2022. He has been interviewed on CNBC, dated 7 December 2021. Brian asked him, is he still bullish on his company, and asked about his hope on the future of oil as a business. Let's hear it from him.
We see gasoline and diesel demand in much of the world back at pre-pandemic levels already, plus or minus. Depends a little bit on what part of the world you're talking. International aviation has been the area that has lagged the most, but those flights are beginning. We've got to deal with this latest variant and understand what it really means. But broadly speaking, economies have opened up, economies are growing, and we are putting this pandemic behind us month by month, quarter by quarter.
Will there be oil in 30 years?
Yes, there will be oil in 30 years. 30 years from now, there's going to be more than 9.5 billion people on the planet versus 7.5 billion people today. There'll be a much larger middle class. Demand for energy will be much higher than it is today, and we will have a more diverse energy system, which will have more wind and solar and renewables in it, but it will have oil and gas in it still, absolutely.
So yeah, Chevron seems to be positive. I really like this company, and it should be worth investing in as the energy market is growing big. And to be honest, our day-to-day energy needs are increasing. The more we consume, it raises their demand. Let's move on to the next one. Number 2, Eli Lilly. Eli Lilly, an American pharmaceutical company. The stock hasn't rallied much lately, since over the past year, it has only gotten a 20% increase, which is significantly lower. They have many medicines under development. Their drugs are for Alzheimer, diabetes, and obesity. They are expecting their Alzheimer drug launch in 2022, which has been showing very positive results. That should be big news for the company to begin its dream rally. But also, Biogen, its competitor, recently got bad news on its Alzheimer drug, so it might hurt their launch. We'll have to wait and see. Jim's outlook is pretty positive about the drug, as the company has been working for ages now. He recently interviewed the CEO of Eli Lilly, David A. Ricks. He is pretty confident with the drug being approved soon by the FDA. Let's hear it from him and the CEO.
The winner will be Lilly. Now, Lilly's down a lot. I think that's a mistake. David Ricks gave a very good presentation yesterday at JP Morgan and said basically, look, our tests are very different. They have a much bigger test. They can roll back plaque. The stock's going down, I think, because guilt by association. But I don't think David Ricks ever intended to charge the exorbitant prices that Biogen charge for a drug that has very specious probabilities. I mean, it's quite clear that they've got the two best drugs in the pipeline of anybody on earth, particularly the Alzheimer's drug. And David has been very low-key these days about it, but it's a winner. And I think the stock should be up.
On Alzheimer's, obviously, as you know, this is an area we've been working hard on for over 30 years, spent billions of dollars researching this area, and have a very promising later stage program called donanemab. It clears plaque from the brain very rapidly, as many as 1 in 4 patients after 6 months, and most patients after a year no longer need the therapy. That's how well it clears plaque.
On top of that, a pharma analyst from Bank of America shares his positive outlook on Eli Lilly's growth.
From a pharma perspective, we still like Lilly. They do have a COVID antibody, but that's not really part of the story. The story really there is launch of a diabetes drug as well as an Alzheimer's drug in the middle part, the second half of next year. So in the big pharma space, that's definitely still one of our favorites.
Eli Lilly is being everybody's favorite, but still, we haven't seen a big rally since long time. Stock is down 10% for the past 10 days. Let's see what it has for us in 2022. Now, moving on to the next one. Number 3, Bausch Health. Bausch Health, yeah. If you're a person wearing contact lenses, you must have known them as Bausch & Lomb. Yeah, they've changed their name from Valeant Pharmaceuticals to Bausch Health recently. Joe Kramer has been very bullish. He recently had an interview with CEO Joe Papa. You may be familiar with his show Mad Money, in which they had a very good talk. Joe said they had been reducing their debts lately, closing debts worth $10 billion in the last 5 years after he has been appointed as CEO. Let's hear it from Jim and Joe Papa.
I raised my price target for Bausch just now for the investment club, and the reason I did that, why I like it for the investment club, is Joe Papa's done everything you could ask. He's splitting the company into 3. Nobody seems to really care about it. It has got no sponsorship whatsoever. He's cut debt by $10 billion. The Bausch, which is going to be the fundamental piece that you're going to get, is still the premium, the Mercedes of eye care.
Well, Jim, I'm going to go back to your comments in May of 2016 when I joined, and you talked about some of the challenges I faced. You clearly said I had too much debt. You're absolutely correct, and that was like $30+ billion. You said I had multiple investigations. So over the past 5 years, what have I done? I've worked on reducing that debt. I brought the debt down by $10 billion. But there's still something we need to do further. Number 2, we've resolved the legacy legal issues that the company had. And number 3, and most importantly, we returned the company to organic growth. So those are the things that we've done. And now we think by putting the business in a position that allows us to separate into 3 great companies, that's what we think will really unlock the value. And the good news is we're right on the threshold today, and over the next 30 to 60 days to unlock these companies. We're really excited about it.
We have this innovation, 165-year legacy, but also importantly, we've increased our investment in research and development. We're really excited about what that means for our future and how we can continue to help make a difference in people's lives.
Their stock price has been declining very much since 2015. They haven't moved up for a very long time. According to me, I follow this one principle: don't catch a falling knife. Jim is being positive because the company has been restructuring lately. They have 3 companies lined up for IPOs this year. That might be one big reason. Now, moving on to his next suggestion. Number 4, Honeywell. Honeywell, they had a fantastic rally. They made a whopping 97% ever since the COVID crash. Honeywell has been Jim Cramer's last suggestion for 2022. They are great in every other sector other than aerospace. Trading at a forward price-to-earnings ratio of 25.5 times revenue, Honeywell isn't exactly cheap to buy right now. If you're holding, selling Honeywell at this stage may make sense from a valuation point of view. The stock has zoomed to 236 as an all-time high from 128 of the COVID crash. Let's hear it from Jim.
I also come in with Honeywell, but that one just ran. It almost makes me feel like that's the end of the rotation into earnings stocks. That's the last one to go. Honeywell, we knew they couldn't blow it away in aerospace. Every other division was great. Honeywell is historically expensive, as Bob Pisani said, but if you get aerospace back, oh my God, you'll wish, why did I sell it at 128 for? And that's what I think is at stake here.
The aviation industry is starting to recover, and Honeywell has jumped into aerospace a lot more in the last quarter as well. This could lead to a great performance this year. So yeah, Chevron, Eli Lilly, Bausch Health, and Honeywell are Jim Cramer's best stock picks for 2022. Hope you found this useful. We have a playlist, Warren Buffett Mindset. I'm sure that would help you make wise investment decisions for the long term. Remember, stocks are businesses. Buy stocks like you personally invest in the business. I learned this from Warren Buffett. It's really an eye-opener for me and certainly gives a different perspective. Thank you for watching. Like, share, comment, and subscribe if you like this video. Click here to make better investment decisions.